What's going on, everyone? So I'm gonna come back at you with another stock today. So before I go into what stock I'm going to be picking or looking at today, I am gonna go into my requirements for my stocks. So my requirements is it needs to be a dividend paying stock, it needs to be good growth, and it has to be in good financial standing for me to add it to my account. And if you didn't know this is for my bridge account, comment down below if you want to know what a bridge account is or why I'm even doing this. But let's get into this stock and why I am getting to. So what am I going to be looking at today? It is Royal Caribbean. So I'm looking at Royal Caribbean right now, and I am looking to add a entertainment portion of a stock to my portfolio. And I looked at another cruise earlier, and I figure I'll keep going with cruises until I find one that matches my portfolio. And this one, it had a 1 month growth of 3.74%, a year to date growth of 14.86%, a 1 year growth of 77.69%, a 3 year growth of 610%, and a 5 year growth of 379. So according to that, it does meet my criteria of a good growth stock with those numbers. Now, all these prediction here does not mean what it's going to be doing in the future. It just gives me a baseline of data to look at. Now, I want to look at the dividend of this stock. What is going on with the dividend? So it pays a 1.13% and has a dividend increase of 1 year and annual dividend of $3 a year. So it has a dividend payout of 24.92%. Now, right now it pays 75 cents per share, and it does look like it meets my second criteria or two of my criteria. So let's go into the finance. I like to use MSN a lot better because I'm used to using it. So the first thing I always tell everyone to do is to look at the gross margin and the net profit, because that's where you want to focus to see if it's worth to even continue looking at the stock. Now comment down below what y'all think about that. But the gross margin is 48.91%. That's a pretty good gross margin with a net profit of 17.57%. So let's see what it has been doing the last few years financially. Well, it had a few bad years, about 3 bad years of a negative, but that's due to COVID, and I can see that right there. Almost every cruise line had this issue, and this is why I'm trying to get into it, because it's on the rebound and I'm trying to catch it on another good growth. So if I follow the trend and exclude these red years due to COVID, it looks like it is doing pretty well. 8.84 billion, 13.9 billion, and 16.48 billion. So that's the revenue increase. Now, I could go in detail and look at all this stuff, but for me, that's not important. What I want to look at is the balance sheet. The current asset is 1.71 billion with a fixed asset of 35.37 billion. Now, why do I want to look at that? Well, I want to see what the liability, and as long as the current asset and fixed asset is more than the current liability and long-term debt, that means they're a net positive, or their net worth is actually in the green. And that's something I want to look at. I don't want to own a stock that is in a negative net worth. So 18 plus 9 billion is 27 billion, and that's bigger. The fixed asset is bigger than that. So yes, they're doing well on that. And the other thing I would like to look at and see what the free cash flow doing. They had a few bad years, but it looks like they're sitting on $2 billion on cash of free cash flow. Now, yes, I can look at the numbers deeper, but financially they look stable. I'm not looking and trying to manage their finances, their own company. So I just want to look at it. So the company there, let's see what they've been doing. They do have a bunch of grant, and Lake Robert Alexander has sold some of it. He's the chief legal officer and secretary, and he sold about 3K. So yes, this stock does look like it's doing pretty well. If I go back and see what investors are in here, you can see that the Capital, International, Vanguard, and BlackRock. Top buyers is BlackRock, Capital One, and International, and top seller, Citadel Advisor. So looking at all that, I'm not really worried about it. And everyone is giving it a bullish, and I kind of agree with this. Well, I do agree with it. So let's go back and see what AI says about this. I like using AI because it does give it a pretty good breakdown and understanding what the data in the group. When I do research, it's really good to add it. So let's look at it. The valuation is 3 out of 6. Yes, I about average with the valuation, and it does pretty well. Earning is 6 out of 6. That's where I want to see. If the earning 6 out of 6, that means the growth of the company is really gonna do pretty well, which it leads to the future growth. 5 out of 6. This is where I'm looking at. I want good growth opportunity, and with a dividend payout, I'm trying to take advantage of this. So yes, I think it's doing pretty good. In the historical performance, it's 4 out of 6. That is pretty good. And the financial health is 1 out of 6. I agree with the financial health because it had a few bad years. If you look at this, they just recovered and they had 3 years of bad year. But they had 2 years of good, profitable years. And this is why I'm getting into them, because they are in a good, profitable year. The analyst does say to buy, and I agree with them to buy on this stock. Now, if you want to compare it, it's doing better than Norwegian. Carnival Cruise is doing better on their earning per share, but it is meeting the standard. And if you compare it to everything else, like the other cruise line, it's doing better. Now, the revenue per pair is 7.27, and if you compare it to Carnival with 7.47, it's pretty close. Where Norwegian Cruise is negative, I don't know why Chipotle is on here, and AMC. So if I look at all those numbers, and you need to understand why I'm picking stocks like this, is what do I think about this stock? Personally, I think I'm going to purchase this stock. Not much, probably about $500 to $1,000 at this time, just so I can have it part of my portfolio and keep an eye on it. And if it does do a dip, I will increase more purchase power in there, just because I think this company is going to be doing pretty well in the future, because it has good future growth and it's paying dividend, and financially it is stable right now. Now, the financial health might not be good, but it is in good financial stability. So with all those, it meets my requirement, and it looks like I'm probably going to be hoping that it gives me a 17% to or 13 to 17% growth year over year. And that's what I'm shooting for with this dividend. So it is beating the or matching the S&P. And this is just me trying something new to build my bridge account. Now, if you want more videos like this, please like and subscribe to my videos. And that's all I got for you.